Whether you're an avid property investor or about to buy your first property, why do it alone when you could partner with Australia's best buyer's agent? Director of Pure Property Investment, Property Investment Professionals of Australia board member and REB Buyer's Agent of the Year, Paul Glossop, can take your portfolio to the next level. Get in touch today to discuss your investment goals. Get one-on-one insight from Paul Glossop. And for the first 100 people, this service is completely free. Head to purepropertyinvestment.com today to schedule your consult with Paul Glossop directly.
Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
Hi everyone, it is Tom Panos and Phil Tarrant from Momentum Media, the winners from the Australian Financial Review. Most innovative business?
It was the most innovative companies index ranking this year. So we didn't win, but we were on it. I don't think there is a winner. You just get listed within your specific areas expertise for being innovative, Tom. So innovation is good.
Mate, and you are so innovative. He rocks up on what's making headlines with a branded vest. Right, he's done very, very well.
No, I'm hiding it. This is one of our innovative companies managed, which we've spoken about beforehand, which is a property management platform for property managers.
Yeah, well, I've got to tell you, Nick Burris is on the case. I mean, there is not a week I don't get a contact point from Nick Burris with Managed. He must be a full-time working employee in that business.
Yeah, Nick lives and breathes Managed. Himself and Tom Richards are working in lockstep with a great team to drive that organisation forward. It's getting a lot of properties under management now. It's a very different proposition from what the incumbent property management software platforms provide. Completely cloud-based, Tom. I don't want this to sound like a sell, but obviously we invested in it because we saw an emerging and evolving property management sector that's changing in time with a lot of handbrakes on it based on old legacy software systems and desktops. So, it's all in lockstep with the COVID changes. People working remotely and at home. It means you can do your job anywhere. So we're really excited about it, mate, and it's doing very well.
Fantastic. And I'm really pumped today, Phil, because I love having every conversation I have with you, but I like it even more when the subject we're going to talk about is something that I'm, obsessed with, and that is property investment. And when you said to me off camera, let's talk about these issues today that we've been covering through Smart Property and, REB and your various other publications, I thought this is perfect timing because this morning I had a conversation with a guy at Haberfield at a cafe who is trying to achieve his dreams in life through property. And he's just sort of getting into it now. And he said, Tom, I really thank you for catching up with me. The first thing I want to say to you is, how am I going to do this with property investment? I just don't know where to start. And I said, that's your first problem. Change the question. And he goes, what? And I said, don't think about how, think about who. And it's a great book title, Phil. Who, not how. And then I explained to him, when you change the question to who's going to help me achieve my dreams, you begin to realize you need a crew of people, just like at a pit stop where you've got people working away. You need a crew of people because I've got to tell you, to achieve your goals in property, if you say, how am I going to do it? It just brings more problems to your head. How am I going to get the money? What should I buy? When should I buy? Whereas when you get a group of people that are let's call it your cheerleaders, your support staff, it all becomes a lot easier, Phil. And you know that there's not just a property. There's a number of stakeholders in the process when you go down the path of property investment.
Yeah, absolutely. And it's been a real privilege for me, Tom, hosting the Smart Property Investment Show, of which we're going to do a special edition of What's Making Headlines. We're going to put this out onto that platform over the next couple of days. And it's been a real privilege for me because I get to navigate a lot of people's journeys through property. And I'm like any other property investor. I'm just a bloke trying to get by, trying to position myself for a more comfortable retirement using property as the asset and the vehicle to do so. So like everyone else, we're all doing the same things, but I've been very vocal in my approach to investing in property. And if you've never looked at it, go to smartpropertyinvestment.com.au. We've actually documented a portfolio that we built through Smart Property Investment. I think there's 17 to 18 properties in that portfolio now. And we've shown, warts and all, how do you go about doing this? Now, it's a pretty good portfolio. It's worth about, I don't know, it's probably $7.5 million bucks.
Wow!
In value.
So you've been doing a talking commentary on the journey, have you?
Absolutely. From the very first property, back when Smart Property used to be a print magazine, all the way through to where we are today, where a lot of our stuff is broadcast orientated. So we've shown how we've gone about building a property investment portfolio, and there's a couple of reasons why we did that. Number one is that there's so much uncertainty, people don't know. So I think sharing experience is absolutely critical. But number two, when we started down this pathway, there's so much BS in property investment that you only hear the stories of get rich quick, geniuses, and you don't hear the actual trials and tribulations of investing in property. So where we went, you know what, let's build our own portfolio and we'll cover it completely, what we're doing, so everyone else can learn from it. And I've been very open in all of the mistakes that we've made along the way, what we've done well, how we've done it, what strategy we've engaged, and importantly, and for the purpose of this discussion, those people who are the who has helped us do that. And I learned very early on, get people who are better at doing what you're doing, stuff that they can do, so you can be more capable in your role. So I have a great team around me in terms of a buyer's agent. Right Property Group, for example, has been a great supporter in helping me buy property. I've got a great accountant, Munzerul Khan, he's excellent. I've had some great mortgage brokers along the way. I've got relationships with conveyancers, the whole ecosystem to support me to be a more effective property investor. So the point is, number one, if you're a property investor, get yourself a good team. And number two, for the main audience for this particular What's Making Headlines, Tom, it's about you need to understand how property investors work so you can be an enabler for them to do what they do better. So if you are a real estate agent, if you're a mortgage broker, if you're an accountant tuning into this, and you're not focusing on this, think again, change your tact.
I love that. Out of curiosity, who are the first roles that come into your mind as a prop? So you've got the property investor, and the property investor is buying property. Who are the other people that are stakeholders that are part of their team?
So the journey worked with us is that we were thinking about, we went, okay, we're going to do this. And our first relationship was with a mortgage broker. Right. So I started looking around at properties, and I worked out pretty quickly that to buy effectively, you got to spend a lot of time researching. But I went down a pathway getting pre-approvals first, found ourselves a really good mortgage broker. Now that mortgage broker, understanding what we were trying to achieve, went, it might be worthwhile you guys chatting with a buyer's agent because that's what they do for a living. And this is back in 2012 or so, back when they weren't that common buyer's agents, which is an emerging industry. We hooked in with a really good buyer's agent, Right Property Group. The guy I work most closely with there is Steve Waters and obviously his business partner, Victor Kumar. And we started working with those guys and went, okay, you guys, we're going to appoint you to buy our properties. They connected us in, the broker then connected us in with an accountant who was very capable, a very property management focused accounting practice with so
can I ask Phil, do you use this, you use the same accountant for everything? You've got one accountant, right?
One accountant for all of our wealth creation type stuff. So he knows us and what we're achieving. So that essentially was a journey of how we established our team to help us start going down a pathway of investing in property. And the points I would make is the buyer's agent, they come from a buyer's agency property investment background with all the real estate license and stuff. They're a huge enabler for working with real estate agents to get the job done. Mortgage broker, absolutely critical. We wouldn't have this portfolio today if we didn't have a mortgage broker who not only sorted out the loans for us, but also giving us a kick in the backyard and keeping us accountable to the plans and the strategy we had in place. And that is only complemented with a great overlay from a great accountant who understands the overall objective and why we're doing this and keeping us every step of the way, whether it's compliance orientated or strategy orientated or just motivation orientated, on track. So it's more than just the service. It's everything else. which is the X factor, Tom. And that's what the best agents and the best brokers and the best accountants do.
Yeah. So I'll do a bit of an autopsy on what you've just said there.
Yeah.
Example, buyer's agent. The truth is, buyer's agents are often in the black book, in the top pocket black book of a real estate agent. So just picture this, Phil. They're in there. What happens is an agent lists a property. The agent is told by the vendor, listen, we don't want to go on the market. We want to do off market, right? We're private people. So if you've got any buyers that can buy quickly and in a hurry and you can bring them through, let us know. What do? They look it up there. They look at the buyer's agent. They know that these buyer's agents can act quickly. They call them. So all of a sudden, as an investor, you're open to opportunities that you might not have got being on realestate.com and Domain. That's the buyer's agent value there, right? And by the way, if you're not using a buyer's agent, you need to try and cultivate the same relationship the buyer's agent has with agents, which means that you've got to get them to like you and trust you and show them that you can act quickly. The mortgage broker. Well, the mortgage broker is interesting because when you deal with a mortgage broker, you begin to realize, hey, it's the length of the loan that I'm going to get a benefit in. I'm not going to get sucked in by some smart, deceptive marketing that might suck me in for the first 6 months, and then I'm stuck with a product that doesn't actually suit me in the long run. That's where the mortgage broker comes in, because a mortgage broker is not looking at one product. They're not looking at one bank. They're looking at the whole marketplace. Then we move to the accountant. The accountant's important because, like myself, that's happened before, I have bought things in wrong entities. He said, no, you should have bought that in that entity for this reason, right? You should have done that. So all of a sudden you realize, man, have a good accountant. A solicitor, well, apart from the basic stuff, you get a good solicitor. They know that good properties, normally there's a race to sign a contract. So you're not going to have a solicitor having a contract sitting there in their inbox for 2 weeks thinking, nah. Smart lawyers know when the heat's on, the heat's on, and they act very, very quickly. So I can see already, Phil, the value that you're talking about. I see that every day with clients that I deal with. Clients that do well out of property have normally got a great pit crew.
Yeah, I completely agree with you. But it still comes down to use that analogy, Formula One, you're still the driver. You still got to steer the vehicle. You got to work when to speed up, to slow down, to change gears, when to brake, when to take a rest, when to go out and have a toilet stop. You know, it's a really good analogy. That pit crew is only as good as the person who is driving the team. Now, you need a really good team manager, someone who can work with you side by side to make sure you're achieving your objectives, but it comes down to the driver. So in my journey, I'm driving the portfolio growth, but I'm leaning on key people to get done what they need to get done right, and I'm holding them accountable to do that as well. A lot of people make the mistake, Tom, when it comes to investing in property, and this is whether or not property investor or the supporting mechanisms around it, your accountants, your real estate agents, your buyers agents, your brokers, that they think they can outsource the responsibility. And when mistakes happen, they blame others around it. No. The property investor is always responsible. If you make a wrong or a bad financing decision, that is your responsibility. You don't blame the broker. Did you give the broker the information you need? Did you articulate exactly what you want? Did you give them the long-term strategy? Do they get a true appreciation of your financial position? It all comes down to property investors. So don't make the mistake that you outsource responsibility if you're investing in property. And for property professionals, be aware of that as well. You need to make sure that you are a provider of advice and services, absolutely, but you do it, one, within the letter of the law, number two, within the letter of compliance and whatever regulation there is around it. But number three, make it really clear that you're doing the best that you can based on the information that you're receiving.
Curious, as you've been documenting it, I'm sure that you're not going to mind me prying into some of the backstage view of, you're a driver, you've been driving the car, you've had your pit crew. As a driver, what are some of the principles that you've had in investment apart from having a good team of people? What's it been? What kind of property are you looking for? And like, when do you buy? And what are the do's and the don'ts? I mean, can you share some of those?
Yeah, absolutely. I've spoken about this at length, Tom. And this is an important point. The strategy we have today as a property investor is exactly the same as the strategy that we had when we first started nearly a decade ago. And that was to identify under market value properties that have the potential for manufacturing equity within in some way, with upside benefit, investing in areas which have long-term capital growth potential.
So what you're saying, Phil, is you want to buy something for $500,000 that you believe its market value is $550,000. So you already have a property that's got inbuilt equity, plus also the potential that there's some upside to that property, be it that it could be used as a subdivision, a potential development site. If you have got the other property, it's situated in an area that might have zoning changes in the future. Is that what you're talking about?
Exactly, Tom. That's it. So you're making money on the way in, so you're buying well based on that current market, and that comes down to buying in the right location at the right time and using the people you have on your team to support you with that, but also good market awareness, situational awareness. So I'm buying this property in this suburb at this time. What are other properties selling at? How do I find that out? I speak to real estate agents, understand the market. Why is potentially this property cheaper than other properties? You get all that information out.
Phil, out of curiosity, how do you do your reconciling on whether you're buying well? Is it through things like realestate.com or RP data? How do you do it? Is there like
a lot of it? I'll lean on my buyer's agent to tell me why, because they're the person doing all the hard work around establishing what the inherent value is of that property, based on market. Comparable properties, market intelligence with real estate agents. So I would look at I do sense check it myself, because I'm the guy pulling the trigger on it. I would go to realestate.com.au and I would have a good look of properties that are getting sold in that location at that point in time, which will give me an immediate, is this under or over market value right now, based on other stuff that's selling at the same period of time. So that's relatively easy to check. And if I want my own take on it, I will call up real estate agents in that same suburb saying, hey, look, I'm looking to invest. I'm looking for this sort of thing. What am I looking at in terms of purchase prices? So, often to pick up under market, inverted commas, under market value properties. So, compared to other properties which are the same on the market, there's normally a reason why it is under market. So it might be, what do they call them? The 3Ds or the 4Ds in property. There's death, divorce, there's debt, and there's something else. Normally there's a backstory why it is cheaper than what other properties are. And that, as a property investor, is where you manufacture equity on the way in. And that's been critical to our strategy, Tom, since the very first day.
Do you get a pest and building on every purchase?
Yep.
Do you get the pest and building after you've had your offer and acceptance?
It depends on what state we're buying in. So in Sydney, if we're buying at auction or even at a private treaty, once you sign the contract, you're pretty much you're in for the purchase of the property. In Queensland, for example, I use pest and building as a tool to control the deal. So if I find a really good property in Queensland, I'll go, you know what, I'll grab that. I'll negotiate on the price. I'll go, send me a contract, sign the contract, send it back. Then I've got a period of sort of 7 to 10 days, maybe 14 days, to do the pest and building inspection or do some other due diligence before the cooling off period goes. So, it's subject to finance approval, pest and building, all this sort of stuff. So every state operates differently, Tom. So if I see a good buy in Queensland, I'll sign the contract, I'll pay a deposit, $1,000, whatever it is. Then I'll do a pest and building inspection. And then however that comes back, I might go, yeah, you know what? I've done this pest and building inspection. There's 10, 20 grand of work to be done. I'm taking it off the purchase price. They can either go yes or no. So it means I've controlled the property. I've taken it off the market. Same applies for finance, Tom. So for whatever reason, if I can't manage to secure finance at that period of time, or I don't get at the rate I want, I can walk away from the deal, get my deposit back, but I've controlled that property and it's given me breathing space in order to do that additional due diligence, different in other states.
Okay. The next thing I was going to ask you is, do you care what time of the year you buy, or that doesn't affect it? It's not like, have you noticed a pattern by this time of the year you'll get bigger chance of buying good value, or not really?
Sometimes I've bought some really good properties just prior to Christmas. So when people are already in the exit zone thinking about the summer holidays, I've picked up properties on like the weekend before Christmas. There's less people in the market. It's a good time to buy at auction. You've probably seen that. A lot of people don't like to auction just before Christmas because people are already thinking about other things. So picked up some great properties at that time, really, and bought really, really well. So there is some seasonal fluctuations around it, but a lot of it is driven by all the other factors which shape sort of the supply and demand equation. If you think of, you think about the most recent federal election when everyone thought that Labor was an absolute shoo-in victory. House sales went down ridiculously the months running up to it. So there would have been some good buying around there. Less property on market, but a lot less buyers because they're concerned about whether or not negative gearing was going to get taken away, and therefore it changes the investment profile. So you need to be aware of and responsive and reactive, but it's not like, buying summer because summer is better. A lot of it is a lot more situational, environmental, depends on what banks are doing, what's happening with credit or interest rates at any given time. It depends on what regulation is out at the moment. It depends on how many other property investors in the market, whether or not there's any stimulus for first-home buyers. So a lot of it is economically situational related rather than being seasonal.
Phil, you got the option of buying a unit closer to the city or a house further out. Same price. I know it's a general question, but where do you veer towards?
House further out.
Why is that?
I wouldn't be touching unit markets at the moment. You only need to look around inner city of Sydney, and I think towards all that new built stuff out sort of Green Park or Alexandria or that particular area. There is this impression or perception right now that rental markets across the nation are falling to pieces. That is not the case. There's a lot of positive pressure on rents at the moment. In some places, I'm talking about pushing rents up because the demand for rents is huge. You go to some parts of the capital cities, and that story is actually true, that there is huge vacancy rates, but it's very geographically located. So I like to put my money in houses, Tom, and that goes back to our strategy, identifying assets that have inherent value at the point of purchase, so you're gaining equity on the way in, and then manufacturing equity at a point in time. So you have that option. Hard to do with apartments, Tom. You give it a coat of paint and a new kitchen, that's about the extent of it. But with house and land, you've got a lot more capability to leverage that particular strategy. And as I said beforehand, our strategy from when we started versus to where our strategy today hasn't changed. What has changed is where we have bought property over that period of time. So where do we get our biggest bang for our buck at any given time to support that strategy that we have in place? Buying well, buying in places that have upside potential, and buying for the future. And you got to remember also there's always a cash flow component of this as well. So towards as neutral as possible in order to help the cash side of the equation in paying off the mortgages. But again, back to our portfolio, we've spoken about this at length. My portfolio costs a fair bit of money to keep every year. It's a couple of grand a property. There's a lot of properties in it. But back to structure and accountants, the reason why is that I invest in trust. We invest in a trust within Smart Property Investment that has a lot of costs associated with it, but there's a lot of benefits for us in terms of protection as well. So it's a huge, complicated matrix of moving parts, Tom. But it all comes back to the right people helping you make the right decisions.
Do you believe in landlord insurance?
I have landlord insurance across all our properties.
You do?
I do, yeah. So this is, it insures the house, fixtures and fittings, and landlord protection for a period of time, 3 months or something or other. But sometimes those policies are not worth the paper it's written on. It's often hard to get that back.
Have you had a tenant from hell?
Yeah, I have done, and we've ended up in tribunals maybe once or twice. And again, the property manager is a great enabler. That we use property managers for all of our investments. I don't do any self-managing at all. I like having a professional looking after, maintaining our assets and managing our assets. So they did all the heavy lifting when it comes to that type of stuff. But as I've said on smart property investment, I'm by no means a perfect property investor. There's a lot of flaws in how I do stuff. Sometimes, I let things get out of the way, and administration at times hasn't been great. And, I'm quite painful to deal with in that I'm sometimes not easy to get a hold of, and, all that sort of stuff, right? It's you need a particular property manager, mortgage broker, accountant, and a property buyer's agent to work with me, mate.
Well, listen, I've got to say to you, one thing that's come out of this conversation is that I've occasionally listened to your Smart Property podcast. I'm going to go listen to more of it. And I'm the binge listener. I'm the guy that over a 1 week period will go do 50 episodes, right? I'm not the type of consumer that does, it's Tuesday, I'll listen to this. I seem to binge on, but I can tell you, it sounds like it's going to be the fastest way to speed up someone's education. Have you done 200 episodes?
Oh, mate, a lot more than that. We're up to, probably 4+ million listens on it now. There's a lot of episodes there, and they fluctuate between me having a chat about our portfolio versus me chatting with other property investors, getting their story, and then talking with people from within the market, i.e. yourself, or your property demographers or your property researchers, your REA group type people, your Cameron Cushers and Tim Lawless and Louis Christophers of the world, down through all the buyers agents. So I had a really good chat yesterday with Simon Presley, who is from Propertyology. So, mate, I've got the best job, seriously, the best job in the world to be educated about property. I pick up the phone and I can talk to absolutely anyone who would tell me exactly what to do. And I'm very conscious how much of a privileged position that is. But you know what? That's accessible and available to everyone, because what I found, Tom, in property is that, number one, property investors love talking to each other. So you can build yourself your own network of people who are doing the same stuff you're doing that you can learn from. You might have people who know more than you. You can turn to them for mentorship, or might have people in there that know less than you, and they can look to you for guidance. But anyone could essentially speak to the right people right across Australia. And this goes back, you got to pay for this advice, but it's often well worth it. You can have the best team, buyers, agents, accountants, mortgage brokers. They are out there. You just need to engage and connect with them.
Yeah, well, I've got to tell you, Phil, property investment is probably, I would say, the biggest thing that consumes me outside of my normal course of work. I'm obsessed with it, to the point where if you were to look at the text messages that I get regularly, they are from people that are property investors, landlords. Some of them are dealers and developers. And I just can't get enough of it. I mean, even this morning I was having So, Phil, one of the things that a lot of people, I do spend a lot of money that goes to waste, but it's part of my due diligence process. So I did $3,000 last week in something that I missed out on, right? So what happens is people that get paid along the way. So you do this stuff before you put on the 10% deposit. So, I've got a bill from a town planner. Everything's a little bit lower than market value, but you've got to take that into account, right? That's part of the thing, and they are tax deductible. Oh, that's what I was going to ask you. Are most of your loans interest only or principal and interest?
It's a range now. Some of the earlier stuff that we bought, because the loans naturally moved to a principal and interest environment after a period of time. I just haven't worried about refinancing. I've kept them on P&I. And to be fair, what they were when we started versus what the rates are now, it's about the same as interest only. So I'd say probably a third, 40% would be principal and interest, and the remainder would be interest only. I've got a good mix of fixed stuff and variable stuff. I fixed a fair bit a couple of years ago purely because I couldn't get the variable rates I wanted. It was a very different lending environment. So I fixed them at pretty competitive rates, what I thought then, which are over market now. The rest I keep variable because it just gives me utility. And also it depends on where we're going. We spoke about identifying properties with a bit of an X factor. So a development, a granny flat, a duplex, for example. if you're fixed in on those type of properties, you've got some handcuffs on what you choose to do with it. So, starting to breaking mortgages can start getting expensive. So it's all about diversification. Talk about lenders, Tom. We've probably got 6 or 7 lenders that we use across the portfolio, ranging from the major banks to some of the mid-tiers.
Phil, what do you say to the people that are listening or watching this right now, watching it on Facebook or listening it as a replay on your podcast? What do you say to people now that are saying, but guys, we're in unprecedented times. We've just had a one-time in 100-year event. The job stimulus, the government grants, they can't continue on. Life is going to change in the future. We've got, strong currents coming. What do you say to people like that?
It's huge opportunity. It's huge opportunity. My mantra is, if you can afford to invest in property, now is the right time to invest in property. There's markets right across Australia. They all move, act, operate at different speeds based on what's happening. Macro, microeconomics, political stability, infrastructure, supply and demand, population changes, infrastructure development, all the moving parts, the property fundamentals. And if anyone wants to know, I had a really good chat with Simon Presley around this. So go and check out smartpropertyinvestment.com.au. There's so many moving parts to this all, Tom, that if you're a good operator, you can find great locations to invest in right now.
Did you talk about locations with Simon?
Yeah, we did. Not specific locations, because he keeps that stuff pretty close to his chest, but he pretty much gave away all the stuff that you need to be doing in order to be able to identify where you should be investing. So the location is part of it. That's about identifying an area to invest in that's going to have capital growth over time, right? But the other part of that equation is you as a property investor. Do you have a good, stable job? That's a pretty important thing. Do you have your personal finances under control? Do you have surplus in your personal finance? Are you self-employed? Are you showing a profit in your business? Can you secure finance? Will the bank like you? All these type of things are absolutely critical, Tom, because if you have confidence in your ability to borrow, that's a really, really important point. Secondly, if you have confidence in your ability to service debt, that's a really important point. And if you can tick those two things off, then you can start thinking about where you should be investing and why. But the other things are really, really important. Now, what's happening now is that a lot of the negativity you're hearing in the market is driven largely by increase in unemployment. Yes, that's a real clear and present issue for a lot of people, but that's not everyone. We're talking about an unemployment rate of 10%, Tom. That means 90% of people who want to work or are in working age are working. So all those people with good, stable jobs with income, why wouldn't you be thinking about investing in your future by creating wealth through property? Now, that doesn't mean that everyone should go out and buy a property. When you look at the numbers, Tom, most property investors, I think 1 in 8 or 8%, I can't remember exactly the numbers, of Australians have some exposure to property investment. So they claim something on their tax return, right? Most property investors have between 1 and 2 properties, Tom. And the reason why is that the first property they buy is the wrong property, which puts them under some level of stress financially, some sort of cash flow related stress, so they can never propel into 2, 3, 4, 5, 10, 20, 100 properties. So most property investors buy the wrong property first. And to your point around apartments right now, I wouldn't be touching apartments because that would be a wrong investment.
Yeah. Well, I've got to say, Phil, this has been a very, very strong podcast in the sense that I know that making money while you sleep is the only way that you're going to be able to live a great life, because at some point you're going to want to exchange your hours for work to do things that you like. It helps a lot when you love your work because, it turns around and says, well, I get paid for it and I love what I'm doing. But at some point in people's lives, they want to be able to have options that are not dictated by their employers or their clients or their staff or what have you. It's being able to have the choice to do things. And property is for me, well, look, it's not the only vehicle. I know that some people through shares have been able to build, asset bases. But I just feel the fact with property, you get the rent paid weekly, which means that you can service debt a lot better than what you can through dividends But I'm going to listen. I'm going to
go and tune in, Tom. But look, thanks for sharing your journey. And to be fair, look, you no doubt get people who don't always agree with what you say. Yes, we're flying the flag for property. Yes, we're saying it's a great asset class. Both me and you work in property. It's been a great wealth creation tool for me. It's a great wealth creation tool for you. And to be fair, also, Tom, if anyone was going to be able to do property well, it'd have to be me and you, purely because we're in it every day and the networks and connections that we have. But it's only as good as how you use that information and that leverage. So we fly the flag for property. It's a good thing. It is a great asset class. You talk about leverage. What a great way to get into it. It's a liquid asset. So if you buy well, you don't really need to do too much over time to make sure it is a good asset class. You don't have to manage it daily wondering about, do you buy or sell a share? You buy well at the front end with the right people. It's a good enabler. Now, this chat, Tom, has been largely driven and discussion around me as a property investor, but let's chat about mortgage brokers and real estate agents for the moment. You're tuning into this and you're probably thinking, you know what, I probably could do better dealing with investors. It's not really a core market. I've never really thought about them before. What can I do to make sure I get more investor business? What would you do today, Tom, mortgage broker, real estate agents, to make yourself a great utility for property investors to realise their investment strategies?
I would just go pro on property, and that would mean is I'd become a professional. I would move away from saying I'm a salesperson that just finds out how to influence people and buyer, and I'd say no. I'm going to become a doctor of the product, and that basically means I'm going to sit there and I'm going to. Phil, this is the truth. Even though agents aren't going to want to hear what I'm saying, there are some real estate agents that don't understand how to read a damn contract. I've seen it. They'll, on a Saturday, you'll have a buyer at an auction. They'll say, can I have a look? Can I have a look and see, what the zoning is or where the sewer line's going through? And you'll be seeing him flicking through here. And then they'll say, let me just ring up and see where my boss is, right? Man, you need to be able to look at this contract and say, wow, look at that. There's a mortgage on that. So this owner owes money on it. That's useful to know. Wow. Have a look at this here. There's a, sewer line there. Wow. Look at the zoning there. It's zone B6. What does that mean? Great. Enterprise. It means that down the track, they're going to be able to go up to 8 levels. These are things that when you sit there in front of a vendor or a buyer, they say, shit, this guy's got no commission breath. This guy knows what he's talking about. Simple stuff. I was talking to a real estate agent the other day working for Colliers, and he said to me, do you know if you buy this property here, you're going to pick up $300,000 in depreciation in first year under the current legislation? I go, what do you mean by that? He goes, think about it. You're going to have $300,000 off your taxable income written off there. Here's an auditor's report that we've actually provided for. That's useful stuff to know, right? I would say that, you know what I would do? I would go off and I would maybe start off with the podcast, because I've got to tell you, if you ever want to learn, I find it's really weird because most podcasts are a conversation. Yeah. And I find I learn a lot from listening to conversations versus just like example, a podcast versus an audio book. With an audio book, it's pretty monotone just to hear the author talking.
Yeah, transmission.
Yeah, that's it. That's a good word for it. Whereas when you're listening to the conversation, you actually feel like you're at the coffee table at the conversation, right? You can picture it's like you're having breakfast with the people, right? That's what I like about podcasts. So I would sit there, go off and listen to those podcasts. The next thing I would do is I'd invest in the product, because there's nothing going to be better than ever to be able to say to a client, hey, I love this area so much, I bought one myself. I believe in this area. I got to tell you, it's so strong at an auction on a Saturday to be saying, ladies and gentlemen, 54 Forbes Street, Newtown, here's a suburb where I've put my money where my mouth is. So today, ladies and gentlemen, I'm selling to you what I do myself here. It's so easy. People love that. They think, shit, this guy, he might be bullshitting, but he's not going to be bullshitting if he's saying directly that he owns real estate here.
And Tom, and this is something I picked up from you many years ago, and I hope I get this right. Stories sell, facts tell, right? Yes. Be a good storyteller. Now, what we're talking about here is the intersection between professional advice and property investment. So if you are a property professional, you need to actually understand the line between providing advice and good narratives and storytelling to give information people to make an informed decision. Now, a lot of people, Tom, they always say to me, "Oh, Phil, who's your property mentor?" Or Phil, who do you turn to for guidance and advice? The way I answer that, Tom, and this is relevant to everyone, and you were just chatting about this with podcasts, is, they go, "Oh, why don't you go do an MBA, Phil? Or why don't you go and do a PhD or whatever it is," right? And I say, I pretty much do, it feels like an MBA every single week because I'm a huge digester of information. So I learn through listening, and it's a key skill. Now, podcasts have been a great skill for anyone to be able to learn anything they want to learn about pretty quickly and immediately, particularly in property. The chat we have, What's Making Headlines, what a great way for real estate agents, mortgage brokers and buyers agents to keep connected with the market. Now, we're giving a bit of a flavour for the other side of the equation, i.e. the customer. Now, if you think back to when APRA a couple of years ago put handbrakes on property investing by telling lenders to slow down investment lending, 60% by memory of all properties in Sydney were being transacted by property investors. Now, if you weren't an expert on servicing and understanding what property investors do, that was a real inhibitor for you to be successful in that environment. And these things ebb and flow. First-home buyers are back right now. There's a lot of first-home buyers in the marketplace, a lot of stimulus around it. You need to understand that market segment. You've got to understand the drivers to be a great tool to help them invest or buy their first home. So education is key, Tom, and there's a lot out there, and you can't have an excuse for not being educated in this environment.
No, Phil, well said.
Are low interest rates impacting on your investment returns? It's time to rethink. Rethink Investing creates wealth for clients through the strategic purchase of positively geared, high cash flow commercial property. Industrial properties, retail assets, or office spaces can be a smart investment option that produces significant and long-term return on investment. Rethink your investment options and look to commercial property. Learn more at rethinkinvesting.com.au. Rethink Investing, Australia's #1 commercial buyers agency.
So let's talk about this. All got fueled because you ran a couple of stories this week. I think one of them was the guy that you just spoke about, Presley, wasn't it?
Yes, Simon Presley. Yeah, really good chat with him. Yeah, he's a good operator. He's a very data research orientated.
What is he, buyer's agent or what is he?
Buyer's agent, property strategist. He's a good operator, and he's often got a contrarian view to other people in the market. So, as part of my awareness and how I frame my decision making, he's one of the guys I listen to because he knows what's going on, as a whole bunch of other people in the market. But the purpose of this chat, Tom, was to, I guess, aggregate and curate a whole of the stories this week on What's Making Headlines. Like one was Perth's fastest selling suburbs uncovered. Okay, that's interesting. What does that mean for a property investor? What are the real estate agents and brokers doing in that space? Why diversification is key to success as a property investor? Comes down to strategy. Investor shares why now is a great time to buy. Okay, this is talking about supply and demand, the changes in the market, the different things happening, microeconomic, macroeconomic, economic changes, policy decision-making, whatever else. All of these things all loop in together and connecting together to ensure property investors, people buying properties, can do what they do better, but the people that service them, buyers agents, real estate agents, mortgage brokers, can be more effective. BDM moving into a property manager for realestatebusiness.com.au. Number 2, Sydney agent to star a new reality TV show. So this is interesting. You heard about this? What's making headline?
Well,
Mr. Rubinson.
Well, Gavin's one of my
Simon Cohen. He's a good friend of the Smart Property Investment Show. How you going, guys?
So Gavin's one of my closest friends and has been for a decade. We're totally different people, but we've been very, 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 very close. And I was aware of this a long time ago. And I said to him, so here's the deal. What you've got to understand is you're going to get a lot of exposure. And when you get a lot of exposure, you're going to ensure that you're going to have to do everything perfectly in life, because the minute you go up, you're on the radar of everyone. And people are fascinated. They're not fascinated on the agents. The 3 people involved in this show is Gavin Rubinstein, Delene Lewis, and Simon Cohen, who's a buyer's agent. They're fascinated. And there's a lot of people that have been pumping this show up, including, what's the DJ? Kyle Sanderlands. I don't know how he's involved, right?
I think he's got a production company somehow involved in this, so that's probably the reason why.
So, there's. I think my understanding of it is it's Amazon Prime, 10 shows, Sydney Prestige Real Estate, inside those houses, what they're like, what the decision making's like for the buyers and sellers. I think that it's going to be on aired at some time in the next year along the lines of $1 Million Listing or Sunshine Boulevard. But I got to tell you, they got the perfect guy. Gav Rubenstein's, mate, he fits the bill.
Oh, Gav's a great guy. He's been on the Smart Property Investment Show before. I noticed, Tom, they didn't come and speak to us, a couple of middle-aged blokes that don't dress very well, mate. So, but I reckon you'd be a good chance for a cameo on that show.
Well, I've been told by Gavin he's going to attempt it. He said, mate, you got me on Sky News a few times. Mate, I'll get you on there. But, mate, you know what? I've always thought I'd rather go on a show where the other three people are 70 years of age and I look, better. Charles Tarby said to me once, Tom, I choose to live in the Blue Mountains in a very humble house because I can be the richest guy in my street. That's the reason why.
A shout out for everyone tuning in right now, brokers, agents, buyers agents, and property investors. If you want to come onto the show and have a chat, happy for you to reach out. You can contact the team here, editor at smartpropertyinvestment.com.au. Always looking for good guests, Tom, who are happy to share their story. It's a huge community. Every month it's getting, 130, 140,000 downloads of that podcast. So people like it. I don't know why they like the host so much. For some reason, I do something which seems to resonate. But my job's just to host some conversations with people that know a lot more than I do, and share that and grow that community out. Because the one thing I don't want to see happening, Tom, is people making poor property investment decisions, because it is largely avoidable if you have the right team around you.
Oh, seen that. That's why some of the people are going to be sitting there saying, oh, here's Panos going on about property. You know why? Because they've been scarred by some of the spruikers out there that have told people, buy in this mining town, buy this brand new property, inflated prices, everyone's clipping the ticket along the way. That's the sort of stuff that's turned people off the whole property thing. But if you turn around and look at basic principles, and that is you buy in a marketplace that there's going to be steady capital growth and the cost of that growth is lower than the growth. Think about it. It costs you money not being in the market, right? It costs you money not being in the market. Phil, it's a pleasure having you on again. We're going to see you next week. So tuning off. So if there's a good buy out there, anyone that's listening, and it's under market value, you got yourself a buyer, Phil Tarrant.
Thanks, Tom. Good one, mate. Thank you.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property, or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
Are you ready for a career change? Have you ever considered mortgage broking? The New Broker Academy is the must-attend virtual conference that delivers the blueprint for building a successful business for every new broker. Discover why the demand for mortgage brokers continues to soar and how you can become a part of this lucrative and booming financial services sector. Register for free today at newbrokeracademy.com.au.